been warning about poor reception for Treasury auctions. A week later, we have one of the worst auctions in nearly a decade. Thing number three, Gary, Treasury auction tails.
All right. So, Rob, what we've been talking about here is there are two things that are increasing the size of US Treasury auctions. And just for people who aren't so familiar with this, these go on constantly. There are Treasury auctions every week. And this is how, we largely finance our $35 trillion or so of notional public debt. So, what's been happening is one, the rate of debt increase has been increasing. And so the auction sizes have had to get larger as we are financing larger and larger deficits, right? Now we're adding another $1 trillion in debt every 3 or 4 months. And so every 3 or 4 months, we need to finance another $1 trillion through these Treasury auctions. That's one thing. But another thing we've been talking about a lot is Treasury Secretary Janet Yellen has been reducing the duration of the auctions. That's just a fancy way of saying instead of issuing lots of 10-year paper or 30-year paper, she's doing more 1 and 2 year auctions. She's making the duration of the auction shorter. And the reason that matters is because then you have to refinance more often. So think about it. Let's say you need to finance $1 trillion and you do it through a 10-year auction. What that means is you don't need to roll that debt over. You don't need to refinance it for another decade. So you refinance that $1 trillion in 10 years. But now imagine that you do it in 1 year auctions. That means every year you need to refinance that $1 trillion. And so every year the size of your auctions grows and grows and grows. And that's what we're facing right now. And so we warned about that a week ago. And, maybe we got lucky on the timing. Maybe the analysis was good. But we unfortunately ended up with a terrible 10-year auction last week. The 10-year note yielded 3.96%, and the expected number was 3.93%. And so you might say, was that a big deal? Yeah, it is a big deal. That 3 basis point difference is called a tail. And anything in the 2, 3, 4, 5 per basis point range is enormous. To give you a sense, this was, I believe, the third worst Treasury auction in the last 7 years. Credit to Zero Hedge. We have their graph up here. It's a really good, helpful graph. But when you take a look at it, what you realize is a 3 basis point tail is huge. And it's not a coincidence that these things are starting to happen more frequently. It's because our Treasury Department is trying to push through larger and larger auction sizes. And the bond market is saying, we're not so thrilled with this. There were also other statistics that mattered. Foreign bidders only showed up at 66%. The percentage of bids that was accepted was weaker. The amount still held by dealers was high. We don't have to go through all the statistics. I'm just going to tell you that 3 basis point tail wasn't the only problem with the auction. There was a lack of demand, and that's going to happen when the supply is continually increasing.
Gary, there were reports that Warren Buffett, who obviously we track just with his notoriety in the market, that he actually holds more T-bills than the Federal Reserve. What does that mean? What is Warren Buffett kind of preparing for here over the next coming months?
Well, so first of all, I don't want to pretend, I know exactly what Warren Buffett is thinking. He manages his own portfolio quite well. I'm unfortunately he's not a DKI subscriber, but maybe he should be. But he's doing all right on his own.
He's doing all
Um,
right.
but I think part of the issue is that Berkshire Hathaway likes to have an enormous amount of cash on hand because they'd rather hold cash than make a bad investment. And they're looking for really a limited number of outstanding investments where they can commit enormous amounts of capital. The other thing is the way that company is structured. It's structured very much as a tax avoidance, a legal tax avoidance corporation. And their companies throw off a lot of cash, which is not in many cases taxed in certain ways or distributed. And I'm not saying they don't pay taxes, but they're very good at organizing themselves to limit their tax bill. And so they keep that money. And so you'd rather buy T-bills than just keep the money in the bank. And I think that's a lot of what's going on. The thing that we thought was funny was this was got to give credit to the interns on this one. They noticed that Santiago Capital dubbed it QE, which stands for quantitative easing. So QE with Nebraskan characteristics, kind of making fun of, China's, they'll say we want democracy with Chinese characteristics or free markets with Chinese characteristics, which is basically to say not. But that's sort of their language. I thought it was a clever line by Santiago Capital. I don't know that weakness in the treasury market is going to make Berkshire Hathaway sell their bonds. Again, I think their approach is we'd rather hold cash or treasury bills than make a suboptimal investment. But it is kind of interesting that they own as much as they do.